As a reminder, none of what I say is financial advice. Strictly for entertainment purposes only. Yeah, it's Sunday evening. It's 7 p.m. New York time. Shout out to Synquote. So you guys know this is not a sponsor. This is a partner. And this is not a partner like me sharing a ref link. I'm on the core Synquote team. So Synquote is the #1 options dex right now. So we're not exactly publishing our numbers yet. We don't think that it's really necessary to, I guess, shit on everybody else, but we're doing more volume than any other dex right now. And we are the premier dex for options. It is more than RFQ now. So request for quote, we have limit orders, which are very useful, especially if you're trading options. And there's a lot more coming that I cannot get into, but I am on the Synquote team. So if you use a platform, give me some feedback. Ahmed is phenomenal. And we're doing everything we can to make this the #1 options dex. And I won't go into further details, but there's a lot more coming in the next 2 months. So a couple things I want to talk about during this stream. Just want to touch on a few points that I want to get into. You know, if you see any platforms that I cover during this stream, there's a couple, just as a heads up, there are a few exchange links still below that they still offer bonuses. So if you're looking for exchanges to trade on, there's some in the description. There should be links to some of the platforms that I use. I have to add more links. I always forget that you have to like update the template. I got to have my YouTube guys on this because I do have 3 brothers that are doing everything on my YouTube, but there's a couple other links I want to add below. There's like Coin Market Man discounts that I could get you guys. I'm going to try to make sure that I have as many things that you could take advantage of as possible. Not just like links to shill links, but you know, I want you guys to get discounts. I want you guys to get access to these platforms without, you know, breaking the bank. All right. So we're going to talk about a few things. We'll talk about BTC. We'll talk about ETH. We'll talk about alts. Obviously, derivatives are getting hot, right? Because there's a ton of demand, but it's not like prior rallies during the bear market where the first sign of overheating was the sort of the canary in the coal mine. I don't want to say that though and leave anyone with the impression that I think that the market is hot to the point now where I've reduced a lot of my risk, but it is, from the looks of it right now, it is sustainable still. Although I would say that what is sustainable is the rotations that are taking place sector to sector, you know, in this case, L1 to L1. It seems like there's a little bit more tailwinds to keep this thing going rather than, you know, those rotations. If anything, during the bear market, like prior rallies when things were overheated, rotations also sped up too. So we're seeing that there's a lot of sideline capital that's come back. Another point that I want to get into, some new retail coming in. This is anecdotal, but I think it's worth mentioning. So I'll talk about that. Not too much to go into with that. I mean, it's like I said, it's an anecdotal story. I might as well just cover it real quick. Some people that know that I'm a trader, that know that I am heavily involved in this market primarily, they are starting to seek me out. And we're talking like friends of my wife, their husbands, right? The woman who designed my house, her husband, you know, hey, I want to reach out to you. I told my husband that you're involved in crypto and he messaged me today, right? So this is something worth keeping in mind. People are talking about retail coming back as though, one, that they're not retail, and two, as if the retail that came in at the top last time don't deserve a little bit of credit. So I think that the retail that came in at the top last time, they deserve some credit, right? Because they bought the top, they bought close to the top, they had their trial by fire, and they don't get put in sort of the same bucket as someone who is really fresh to this market. Maybe they dabbled a little bit, but I think they deserve some credit, right? The same way as if you came in at the top of 2017, 2018, you know, if you came in towards the tail end of that, you saw the end of that, and then you had your next cycle, but it's not the same as, you know, you had a little bit more experience, right? Obviously the best way to put it. So I'm not considering just people coming back that came in last time. I'm looking for some level of distinguishment between someone who came in last time, got wrecked, and someone who is just starting to become interested in markets as a whole. And it's not like traditional markets are widely accessible. So it's not like crypto's under a rock anymore. It's not like you really have to seek this market out like you used to going back prior cycles. But anyway, so that's notable. Again, anecdotal. So plural of anecdote is not data, but keep that in mind. When you start having a bunch of new people coming in and asking you about Doge and old things, right, from last cycle that pumped, that's probably a decent point. This is the FOMC meeting and rate this Wednesday, right? So this Wednesday on the 13th, we have the next rate decision. And this is kind of important, right? Because you have a lot of people, you know, traditional markets moving up for a long time now, pricing in cuts, pricing in everything sort of coming off on that end. And this is a chance for the market to get caught offside, traditional markets, right? And I think this could potentially spill over to crypto if there is a raise rather than keeping things steady or a cut. So this is something just worth worth paying attention to because it could come out of left field. If we do have a hike, this is something that I don't think the market is anticipating. Forecast is that things remain the same. So this is on Wednesday. This is at 2 p.m. And then obviously the press conference always at 2:30. This hasn't mattered much, but it only doesn't matter much until it matters again. And I think moving forward, this market is likely to remain more correlated than not to traditional markets. Obviously, we have periods where we're really outperforming, but everything really is outperforming as well. It's easy to forget that, while BTC is outperforming right now, if we look at the ES, if we look at the NASDAQ, they are racing towards highs as well. Okay, so there's really no difference there. As far as BTC goes, a couple things worth paying attention to. And I mentioned this during the last stream. I mentioned this a bunch on Twitter. Obviously, I haven't streamed as much, but you could see that I've been using different tools now that we're in a really strong trend. So I went over this last stream. If anyone has any questions about what I'm looking at right now, really quickly, I've always used a 20 period moving average when we're trending. So I use a combination of a 20 period, a 50, a 10. I look at anchored VWAP. So in this case, we have monthly VWAP on, we have the yearly VWAP as well. And I'm looking at higher time frame position tools rather than focusing on day trading because the markets have been really strong. You want to get really good at being able to change when the market changes. And if you're still trading like intraday rotations, yeah, you could still pull a lot out of the market, but this is a time where you want to be able to put on some meteor moves. And when this market trends, it's a really strong trend. It's a market that trends really hard and has a ton of momentum. So it pays to be able to, hit it from multiple angles. So in case anyone's wondering, what you're looking at, I think I've covered this many times. But as far as I'm concerned, the CME, while I don't think it's necessarily smart money, it's fast money, but fast money is hedge funds, right? Hedge funds aren't necessarily smarter than retail. We've seen many times before where their decisions are not necessarily a step ahead of retail. And if anything, in this market, it's been obvious many times before that retail has outdone the institutional types. But if we look at the CME has been really strong for quite some time now, outpacing Binance or outdoing Binance from an open interest standpoint. And that's meaningful because the CME has higher margin requirements. So there's more capital at play versus an exchange that has, lower margin requirements and offers more leverage. But, we're going into the last month of the year. We're going into the next month, which is decision month. I would pay attention to how this positioning behaves into the end of the month. And I'd start to say, it's going to be more important now than ever because there's not a lot going on at the end of this month because it's a holiday and it's the end of the year. So you have window dressing that's put on. You have not a whole lot of activity that takes place at the end of the year. And I think it's unlikely that a lot of the CME positioning rolls through to January. The term structure, so each contract is steep, so it costs you because you have to sell low and buy higher. And it doesn't make sense to me that the fast money types are going to hold through a catalyst. I think it makes sense to assume that buy the rumor, sell the news occurs. So one thing to pay attention to is that the CME premium so far has been coming off slightly. So if you look at the CME premium, what I'm talking about is I look at the difference between Coinbase and the CME, right? So if this is a high time frame chart, but you could see that overall we've kind of slowly declined over the last month. And this is just showing you the difference in prices, right? So as the front of this is always going to be somewhat skewed because you're going to have, roll and buying higher. But this has shown that I think you're starting to see some positioning coming off, right, in this contract. And I don't personally think, it's going to be a complete mistake, but I don't think you're going to see this roll. So if all these positions are closed out, or if this is not held through to January or rolled through, I don't think that we're going to see that the crypto market does much different. Other things you're looking at right here is the Coinbase Bybit premium and the Coinbase Binance premium. It's gotten noticeably hot as we've put in this sort of more recent leg and moved towards 45. So again, things are overheating on alts. BTC from a premium standpoint, finally getting hot. So I don't want to say it's overheated because the spot market still has been supportive. So everyone's pointing out that there is sort of this Binance Chad that's been supporting price on the way up. We've had strong bid presence throughout this entire move, and that level has been defended. It's right here pretty much. So we're looking at 648 BTC to the tune of 1,000 BTC. So a very significant amount of money, but bid ask is still skewed ask side now. So, do you want to lean on just this person being able to carry the entire market up? There are some things worth keeping in mind with BTC other than it is kind of going vertical at this point. So we keep this on, say, if you turn off log, you start to get the fear chart. If you look at this on the weekly, this is the CME contract. We look at Coinbase, we look at Tether, same thing. This 45, 44 region, very sticky region, okay? I don't think we're going to see this give up without a fight. And if we see CME come off, I don't think that crypto does it on its own. So crypto exchange activity does it on its own. I think the markets right now are moving in tandem. If we look at sort of what has changed more recently for BTC between exchanges, Coinbase noticeably being very aggressive this entire time. Obviously, probably a significant amount of that was Sailor. So if we just isolate Coinbase CVD throughout the duration of this move up, pretty one-sided, starting to see that begin to shift up here. Okay. So as price moving sideways, Coinbase looks like it's distributing somewhat. Still worth pointing out though that price is holding this level though. So price is relatively flat. CVDs are down. So there is bid support there. Right? There is a decent amount of bid support. That is worth noting. Looks like though, if we look at, and this is something that I was able to isolate for before, if we look at Bitfinex, which is home of the whales. So anyone who's been following a long time or anyone who's been on CT a long time know that I've mentioned this. Plenty of people have talked about Bitfinex being sort of home of the whales. As soon as we put in this move up, there was quite a significant drop on that exchange. If we just isolate just for Bitfinex and give you an idea of USD value, we're talking about 400 mil coming off. So roughly 400 mil worth of BTC coming off. Again, price sideways. Actually, if we look at ETH from that same date, sort of like the opposite has happened. So we isolate for ETH, Bitfinex. I think this is worth segueing into ETH right after this because of this. Basically, so right here to here. So from here to here, right? So we have a price increase with ETH. So it's not like this USD increase is all from just positioning added, but you have roughly up to this point right now, 300 mil. If we just isolate this for ETH though, you have a lot of ETH tagged on, a lot of BTC sold, a lot of ETH tagged on. I think that this is noteworthy. I think it's worth keeping in mind, right? How long Bitcoin has been trending, that it is likely to take some time, right? At least moving sideways. And we are going into a catalyst. And from the beginning, I've said in this catalyst that into the catalyst, we probably get a spike and then we think we're going to have a correction. And then between the approval and listing, a lot can happen. But yeah, so BTC, to wrap it up, we have pretty obvious support that's been there the entire time. I don't know if we want to lean on this entirely. Starting to see some behavior on Coinbase, some behavior on Bitfinex that's worth noting. If you look at the options market, they've just been reaching up the entire time. This is starting to show signs of some flipping in terms of the bid-ask skewing more favorably to the ask side than the bid side. So there is less stickiness now and on the way down. So one thing worth keeping in mind, like if you're trying to get filled for a large position and you keep having to chase price up and you're not getting filled, there hasn't been many interruptions in this trend, right? If we're looking at this on the hourly, there hasn't been many interruptions. This started accelerating over here, but even back here, you had some strong moves down, but then each one sort of left behind. And this sets up, a ton of liquidity below, likely things that would be stop orders and the likes. But as the market moves up and, bids don't get filled, okay, what happens a lot of times you'll have those bids come in at market and start to chase. And so when you have bids removed and then them added up here, and we're sort of multiple standard deviations away from VWAP now with a bunch of volume coming in up here, you're removing liquidity below, and it makes it easier for when we do finally have a correction, it to cut through like a hot knife through butter. So, the entire time we've seen bid support though, so there is a ton of demand, but just, keep in mind sort of where we are and what we're approaching, right? More importantly, we're in the second week of December and we're a month away exactly from what is supposed to be the ETF decision. So it brings us right to ETH, because I think this is worth talking about given what we've seen across exchanges, in particular on Bitfinex. So I think this is really simple, honestly. So if we look at this on the monthly, the weekly, I don't want to make it overly complex. I don't think there's really a need to. Monthly, weekly, just kind of identifying where that key resistance was and that supply zone was. And we're going all the way back to 2022, even tapping into sort of the top side of that structure. If we even extend this all the way back here, it's a very obvious level that the market has been contending with. It took longer to break out than BTC, right? Sort of same level would be this 3230 level. ETH, weaker than BTC this year, okay? Dragging behind most of the attention on Solana right now. Leaving this, I think, neglected and doubted. And you have the beginning, this is the first really significant close through this level. When the same thing happened with BTC, it took a while, but it led to a very strong follow through. Now, keep in mind, it's a weekly chart, so give it what is required for in terms of weekly patience, right? I think that, myself personally, when I posted on Twitter that I was de-risking because of my own euphoria, but I was still adding ETH spot and I was staying in BTC spot. So I added to this because I think that in hindsight, this is going to be really obvious to a lot of people that are sort of either doubting everything right now in terms of where all rotations are, doubting ETH specifically, whether it's from an existential standpoint or just from a performance standpoint relative to other L1s, as if this is going to be threatened by other L1s in the near future. So I think this is going to be really clear that this is an obvious area to buy because of this major contextual shift. If you look at ETH BTC, this 0.05 level, let's just put it this way. I know someone who's very popular that is keeping this level defended. Okay. I don't think that we see 0.5 go. Knowing that they're there and they're playing the long game, and you look at that Bitfinex activity, I think that we're going to see a shift. I think it's most obvious that this would happen. Not most obvious. I mean, I think that it makes sense for this to happen post ETF announcement, right? BTC ETF, right? And then next year we'll be talking about the inevitable ETH ETF. So for this, just from a high time frame standpoint, I'm not messing with much. Any dips back down to this 2150 level, I think are worth buying. I think it's also worth noting that you have to be patient with moves like this because this is a big contextual shift. Anyone who's sold for the last year and a half clearly sold too early. This is very clearly a bottoming structure. I think this will take time, but I think everyone's going to be caught off guard because I think a lot of people are focused on everybody else besides ETH right now. Right, as rotations take place. So, and no, it's actually not Kobe who I'm talking about. Let's see. So I don't want to get into low time frame stuff. I don't know if you guys know from the last few streams or recognize, but I'm not really looking at anything that's below, 4-hour chart. This is the time to not get shaken out of really good positions and to give price sort of the respect that it deserves. And understanding the kind of trends that crypto has, which means they're noisy, they deserve some breathing room. A combination of moving averages and volatility stops will be very useful. So using a volatility stop, whether it's a multiple of ATR, whether it's, you're using some kind of basis off of VWAP or a TWAP or a moving average, anyhow. So ETH, I think, is going to do what, if anyone put a little bit of brain power towards it, I think they would remember that this has happened a few times where ETH has lagged and then taken a while because we're talking about a high time frame move. The problem that everyone is, I think, falling victim to right now, or they're getting shaken out of positions, is that they're forgetting that for each time frame that you go up, you have to give price that much more time to do everything you would require on a low time frame breakout for a low time frame move. Okay, but so it just scales up. Again, big ships turn slowly. It's something that I've said many times and it applies to high time frames.